Welcome to the Nuts and Bolts of Real Estate podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how you doing today?
I am doing good, Joe. All good over here. I was just whining to you that we haven't been able to go snowboarding yet because the passes have all been closed. I'm just praying that they don't close the Canadian border because we have a big trip to Whistler coming up here in February. But sounds like you made it back from Kauai and you're heading yourself out to the snow. Where are you guys going exactly?
It depends on where the snow is. We'd like to jump over to Schweitzer and then kind of make our way down through Targhee and Jackson, and then from there pop over to Steamboat. But my sad story is that I haven't been able to get snowboard boots. And we were talking about this, I think, over email or something. But yeah, I haven't been able to get snowboard boots. I thought I'd be able to get them right when I pop back in. And nope, couldn't get snowboard boots. Then I got them and they were a different size, or they were the same size what I had last year, except they were too small. So then I had to send those back and get a new pair, even though they're the same brand as the exact ones I had last year.
What's wrong? Did your feet grow?
Maybe it must have been my problem. So yeah.
Well, that's interesting. Maybe all that working out makes your feet grow. Who knows? Yeah. All right. Well, I'm excited about this one today, guys, because as we all know, I'm just going to jump right into it, that affordable housing is an issue that's here to stay, obviously. And today we're going to talk with Frank Furman from Atlanta-based PadSplit. I have actually talked to some of my friends here around the Seattle area who have heard of PadSplit. We might know some of the same people, Frank. We'll have to chat about that later. But PadSplit works with landlords to maximize the amount of rentable rooms in a property, and then assist in getting those rooms rented. I'm going to quote TechCrunch here, an article that says that PadSplit truly provides a unique solution to a complicated national problem that's becoming more dire each day by introducing critical new housing supply. This is a win for both tenants who need affordable housing and the landlord as a way to increase returns versus just a traditional rental setup. So we're lucky enough to have Frank here with us today, who's going to deep dive, let us know a little bit more about that and which markets they're into, and hopefully they're coming our way. So welcome, Frank.
Thank you, Julie, and thank you, Joe. Appreciate your having me on.
Good stuff. And Joe, kick it off with our numero uno question. We'll get to know Frank a little bit better.
Yeah, Frank, our first question is always about getting to know our guests better. And we would love it if you would deep dive into literally where you grew up, how you grew up, and how that got you to where you are today.
Perfect. Yeah. Well, so I grew up outside of Philadelphia, kind of suburbs outside the city, nothing too exciting, pretty standard. Went to the Naval Academy, college, studied aeronautical engineering, went to graduate school at Johns Hopkins University, studied applied physics. And I was commissioned in the Marine Corps in, 2007. So spent kind of the years after that in the infantry, deployed a couple times to Afghanistan, did two tours there. Eventually worked in R&D in DC, kind of out of the Pentagon for a couple of years. But kind of along the way, I met my wife. We went to the Naval Academy together. And through my wife, I met my now brother-in-law, Atticus, who's one of my co-founders and our CEO of PadSplit. So, I've known him now for, it's funny, people, we obviously have worked together now for years, and he'll say, oh, you and Atticus, like, I heard your brothers-in-law. I'm like, yeah, we're brothers-in-law. I'm like, is that weird at work? I'm like, well, it's not like we started working together and, I started dating his sister. I've always known him through his sister, but, he's always been in real estate, and he went to Yale and moved down to Atlanta, and, really he was a commercial broker and has kind of always been a real estate investor and kind of involved in that world. And when he was getting his start 10 years ago, he's started buying up houses and, was looking for, deals and looking for investors. And so I've been investing as an LP in a couple of his funds, but I was never on the operating side to kind of feel for what he was doing. And I was never in Atlanta. When I moved here years ago, I got out of the Marine Corps. I went to McKinsey, the big consulting firm in London. And then as we're having kids along the way, decided to move here in 2016. And we were kind of both at a point in our lives where, both Atticus and I, where, I was kind of bored with what I was doing at work. I'd moved to a corporate job at Georgia Pacific, and I wasn't really working a ton of hours. And, it was just I was looking for my next thing, honestly. And he was at a point in his kind of string of businesses where, he'd set up these successful businesses and wasn't really as involved in the day-to-day. And we we're both kind of bored. So, we'd get lunch and say, what are you working on? I'm like, oh, nothing. I'm bored. I'm going to the gym. I'm bored. What am I doing? I bought these properties, but the market's kind of hot. He's always kind of the deal guy. And he's like, I've been thinking about this thing for years. I've had this side hustle that I've done on 2 properties where I kind of rent by the room. And it's, there's operational challenges and there's issues, but it's more profitable and it provides this product that is a dire need in the market. So there's high demand and it answers a real need. But how would you do it? And so we kind of started planning it from there. And, that was kind of the beginning of PadSplit. So, spoiler alert, that's, kind of where it came from. And, it's something that he'd been doing since 2009 because he bought a property at the time. He didn't really have much investable money, but he's looking around. He's a commercial broker and that business had really kind of gone south because no one was buying. But he's looking around Atlanta and saying, man, people are selling houses for $20,000. Maybe I should buy some. That was right. But he's buying whatever he could get his hands on. He bought this kind of strange property in Southwest Atlanta, and it was kind of cut up funny and whatever. It was a lot of bedrooms, but the neighbors came by and they said, Mr. Otis and Mr. Mitch, they said, we want to rent rooms in your rooming house. And it's like, I don't know what you're talking about. This is a single family rental, and they're like, brother, like, look at this house. Like, why do you think it's cut up funny? Why do you think you window units? This is a rooming house. We live in the one next door. Ours is being foreclosed on. We want to rent in yours. We'll pay you $100 a week. And he's looking at it. He's like, well, I can get 800 from the housing authority, or got 5 bedrooms and $100 a week. He's like, well, let's give it a try. So he did, and then did another one in 2012. And so he had experience doing it. And we looked at him and said, hey, I'm bored what I'm doing. You're bored what you're doing. We think certain things have changed in the marketplace, right, since then. So some of it is really kind of market driven. Housing has gotten nothing but more expensive since 2012, and the need in the market for kind of affordable housing and the conversation around it has grown. So that's more palatable. Technology has changed too. 2009, really through 2012, this is a cash business, right? So lots of reasons, which we can get into why we do weekly payments, kind of how we think about collections and that sort of side of the business. But then it was metal box on the wall. You send a maintenance guy through and they pull out, kind of money orders or cash. Today, everyone has a smartphone. Even at the kind of very low end of the income scale, everyone has a smartphone. The whole fintech world's really changed. So you can do things that you couldn't do then. And then this sort of regulatory environment has changed in many places. And, Airbnb has kind of paved a lot of the way for some of these sort of marketplace models and how you kind of think about the regulatory space. So we're sort of at this unique point where we had certain experience. We saw this need in the market and experience dealing with it, and we decided to run with it. So we kind of started things up kind of late 2017, really kind of brought our first customers on in 2018, went through a tech accelerator that year and started kind of hiring our first team then. We partner up with our third co-founder, John O'Brien, who's kind of your, standard issue, smart Stanford guy who's a PhD in physics, sort of, so he's the.
Was that kind of the thing that kind of got it moving forward between 2 brother-in-laws having ideas that somebody was smart enough to say, hey, let's go jump in this tech accelerator program and see what happens. And then that gave you guys the confidence to keep blowing it up?
I think going through Techstars was a huge enabler for us, honestly, because prior to that, it was really kind of a side hustle. I was working, he was kind of running his other business. We'd hired one guy, but it was really kind of it was a side hustle. It was a real estate business.
Right.
And we didn't know anything about venture capital. We knew real estate. We kind of knew kind of the operational side, but, we weren't really being pushed, honestly. And we both kind of had our thing. And it forced both of us really to say, hey, we're either in or we're out. This is going to be full time. Right. We'll go through this process and we'll turn this into a real thing and not a side hustle. And so it was really transformational for us and forced us to focus and think about how we pitch other people and set targets and all that, act like a real company.
Yeah, that sounds fun. That sounds fun. I can't help, I don't know about you guys, but we like to goof around here. And I can't help but when you start talking about all this, of the movie Step Brothers with Carol. What's the other guy's name in that movie? I can never remember his name.
John C. Reilly, I think.
Yeah, he is so funny. I highly recommend you guys all go watch Step Brothers, but that
there are more similarities than we'd like to admit.
For some reason, I'm listening very closely, but my mind keeps wandering off to the Step Brothers movie a little bit. Well, that's all good. I would love to just sit at another time and learn all about the Techstars experience, because I'm super interested. I follow all the kind of prop tech stuff. That's kind of a side hobby of mine. I'm a wannabe, prop tech startup person, maybe, or something like that. So which markets are you guys currently in? I know you founded and you started in Atlanta. Have you expanded yet beyond Atlanta? It's been since 2017, so it's been a minute.
Yeah. So we launched several markets last year, and happy to talk through all the struggles that we had in kind of launching them, because it was a lot kind of later and slower than we'd hoped for. But today we've launched Houston, Dallas, kind of Dallas-Fort Worth, New Orleans, Tampa. I'm in Tampa right now. Jacksonville, Richmond, Virginia, Indianapolis, and then of course Atlanta. So we've generally through kind of Texas, through Florida, kind of and we're kind of broadly launching Sunbelt Midwest.
What's the criteria for you to go into a new market? What is it that you're looking for? You're looking for a mix of certain price of housing to purchase, like what those costs are, with a mix of income levels, and what's the sweet spot on why you go into a market?
So there's a few different factors. So on the one is just kind of the general suitability of the market, which is some combination of suitable housing stock, which includes price points, where your unit economics are going to be, and the size of property and the housing stock. So for example, you look at Houston versus Chicago, they're about the same size, but Houston is more single family based and slightly larger versus Chicago, which is more multifamily based and so on, and more expensive. So, okay, you would lean more Houston towards Chicago. The price points certainly matter. Just to give another example, if you look at, say, Orlando versus Jacksonville, the stock in Orlando is slightly more expensive. So it's easier to get deals to pencil in Jacksonville. And thus we've sort of leaned more towards there, though we're kind of interested in both. The regulatory space matters a fair amount in terms of de-risking it for the hosts, as we call it, the landlords. But that can be a little bit complicated. I mean, again, Houston, for example, is no zoning, so it's really, really easy, and people can have a lot of confidence that they operate the properties well, and they're picking the right kind of properties. They can operate them effectively. Whereas if you were to say try and do it in San Francisco, you almost couldn't, no matter what. Even if the deals wouldn't make sense, it's too expensive, but you would get shut down. It's obviously much more restrictive there. So the regulatory space certainly matters, and there's a little bit of a market overlay, but real estate's hyper local. In Atlanta, we have 83 different municipalities, and the definition of zoning, or how you define a family, or what have you, planning can really kind of change one side of the street to the other. So that can be really kind of complicated for us, but there's definitely that overlay. But the most important thing, honestly, is being pulled in by investors. So we've struggled with that, in that you can look, for example, at Houston and say, wow, great housing stock. The price points make sense. You've got growing, net migration into a metro area, which means more pressure on rentals and so on. But until you have someone, the landlord really matters. There's no way around it. All the time we've kind of learned to discount these conversations a bit, but a municipality will reach out and say, we love this. We want you to be here. Like, fantastic. We'd love to be there too. There needs to be someone doing it.
Yeah. Right. Yeah.
We've had dozens of municipalities kind of reach out and say, oh, we love this. What can we do? And in general, the answer is find us the landlords, find us the houses, that kind of thing.
Well, let me ask you a question. So how does PadSplit make its money? And are you guys owning these properties that are on your platform, or are you working with existing landlords, or some of both? You're kind of growing your own portfolio side by side, providing a service to existing landlords, because it can pencil, and depending on how long a property's been owned, or if you're trying to buy new and then roll out this model, that can be harder. But I'm sure there's lots and lots of existing landlords, where this works, because their cost basis, is very low. Or so how does PadSplit
exactly
make money?
So our core business is a marketplace model similar to Airbnb, right? So our core business, we don't own assets. and we were taking a percentage of the rent that's charged, just like Airbnb charges, a percentage of the occupancy. So that's the main thing. That's kind of the tech business. We don't own the assets. The landlords do. We don't live in the assets, obviously. The residents do. And we're sort of sitting in the middle, and we're there to do the marketing lease up. We do all the collections and payment processing. We're kind of the sort of first line of defense for some of the member to member, accountability and ratings and, kind of call center for those sorts of things. But we're just the marketplace. We want to be fair, accountable. We're there to kind of connect those folks and do it well.
What's the fee for landlords?
12% of gross revenue. So again, we basically stole everything from Airbnb. We saw in their SEC disclosure they were doing 13%. We said, what's 1% less than that? It's 12. So there we are. Now we do more than that, right? So we've partly due to COVID and how difficult it was to launch markets where we couldn't have face-to-face interactions, partly due to the fact just our backgrounds and experience and wanting to launch markets faster and also keeping more of the upside. We started a sidecar fund that is technically a separate entity, but does own, renovate, manage assets. We do that both to sell those properties turnkey to investors who they want to own the asset, but don't want to go through all that process. And obviously inventory is super tight right now. So it's difficult for people to do it. And then also just as people who want to be LPs in a fund and they want to, put money in, but want to be totally passive and want a diversified kind of investment. So
do you guys manage the properties? I guess you manage the rental collections, right? That's through your PadSplit site there. Is that what I heard you say? I mean, what does the landlord get for 12%? They get tenants screened. They get, because that's
So we do the whole lease up and screening. So we do that piece of it. So yeah, if you think about traditional property management, there's an element that we do, right? Yeah. So, I mean, if you were a traditional property manager in a single family property, you would do all the lease up and screening, find folks, screen, get them in, moved in, whatever. You would do all of your collections, everything. And you would also, of course, manage the property, the actual asset, right? All your proactive and reactive maintenance, you do returns, everything else. When things go wrong, you manage the evictions, the whole bit. For us, we do the lease up and collections. So on the front end, we do all the leasing, screen up, we do background check, credit check, income verification, employment verification, all that kind of thing. But what we don't do is anything that touches the property. So it's not 100% perfect to think of Airbnb as an analog, but it's pretty close, right? So they handle the marketing and lease up. Now, do they screen? No, but they have the rating system and so on, but they handle that. They don't have a collections business because it's all prepay, but they handle the payment processing. We do all that as well, but we also have a collections team. So, you think about a house, if it is 6 bedrooms and people are paying weekly, you might have, and partial payments in some cases, you might have 20, 30 payments a month. And so we're handling all that process, late fees, chasing people. We have a team of folks who handle all the collection side. So the landlord gets one payment for the month to make it sort of simple for lenders and so on. So we do all that. Now, we also use technology in our platform to assist in the operations of the house, in particular with member-to-member disputes and that kind of thing. So they can communicate with each other, they can communicate with the host, they can submit maintenance tickets, all that's kind of done on the platform. They can rate each other, they can rate maintenance tickets, all that sort of thing. And a lot of the back end we build in seems kind of trivial, but really assists in that. And so let's say you and Joe are living in a house, but you're strangers, right? That's kind of the nature of it. You submit a maintenance ticket to say there's a leaky sink. Well, that goes to the owner, right? Or their property manager, right? They handle the maintenance of the property. But Joe can also see it. So if a plumber comes up and says, hey, I'm here to fix the sink, Joe doesn't say, what are you talking about? Stop trying to sell me your religion. Get out of here. Because he knows it's going on because that's kind of handled. But at the same time, he doesn't submit another ticket because he's seen it's happened. So you cut down on the duplicates.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So Whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. What is the biggest challenge of co-housing? Is running that model? Is it managing the dynamics of we have, we're in Seattle, we have, a number of people that are doing that out here. Is it managing the dynamics between the renters?
So that's certainly a challenge. It's probably less than you would think. There's, we have ratings, a lot of communication kind of handles a lot of that. They communicate with each other. So some of the smaller things can be rectified before they come to a head. So, hey, Julie, your car's parked in front of mine. I need to go to work, that kind of thing. That's really important. Or, hey, stop eating my peanut butter, whatever it happens to be. And we have a pretty active role in a lot of that. A big piece of it is just flexibility, right? And that's part of the offering is that we handle transfers. So again, let's say you call into PadSplit and say, look, Joe's eating my peanut butter, right? I don't have many options. I can fight him, which we don't want you to do. I can, I can let it go, which I refuse to do because I'm mad about it. What do I do? Well, we can't visit the property in Seattle and beat Joe up for eating your peanut butter, but we can offer a transfer. Because really the flexibility is a big part of the value to the renter, right? So co-living is hard. Living with people is hard. Living with anybody is hard, even if you know them, strangers, whatever. But part of the challenge is if you think about kind of the paradigm that landlords have, they want security, and security is a long-term lease. So that disconnect that we've sort of been able to capture within the market is that we go and say, traditional rental, and in most co-living, if you look at kind of co-living the way that it's handled throughout the country is, it's still landlords running a real estate business. So they say, okay, I've got you and Joe are going to live together. You're both going to sign 1-year leases because I'm a landlord and that's what I'm used to. And you're both going to pay by the month because I'm a landlord and that's what I'm used to. And that's what lenders like. We've sort of taken a view on customer focus and turned that on its head and said, hey, we're going to have a totally different model where we bill by the week because it's more convenient for customers, right? When's the first of the month? I'm not sure. Well, when's Friday? Well, I know when it is because today's Tuesday. I know when Friday is. I get billed on Friday. That's fine. And same thing with transfers. So for us, it's less around, we deal with the low income part of the population. Having a long-term lease is not security for a landlord. It doesn't do anything for you because the failure mechanism is someone can't pay. So if someone can't pay, it's time to move on. This is what's best for everyone. That's okay. If there's an issue between people, having a year-long lease as an individual landlord is not helpful because they're unhappy.
So how does that work then? So how long can a tenant rent a pad split room for, or is there a lease, or how does that work? Is it month to month? Is it?
So it's technically week to week from a pure technical perspective. Now they're long-term residents, right? You couldn't rent a pad split for a week. There's actually a 1 month minimum. So, and that a lot of that is to get around or to satisfy kind of short-term rental regulations, right? So 31-day minimum, but it's really week-to-week payments after that. Now the average stay is over 10 months. And our view is that, and we have people who've been with us for 4 years and we'll continue to do that. So our view is that if you're providing a product that people want and and we know it's in high demand. I mean, that's kind of our core conviction, is that there's huge unmet need in the market. If you do that, people will stay for a long time. And if someone moves in and they're not happy, whether it's the product isn't great or, the co-living, I'm having an issue with my roommates, having a long-term lease does you no favors. It just gives you a problem. Now you have a problem tenant. You have someone who might call the police. You might have this issue. You might have fights. So having that release valve is super important to making it work. And because we have a network of properties in any geography, it's no big deal. So, you're living in one house, it isn't working with this person, or hey, look, job churn is significantly higher in this demographic than elsewhere. If you're making $15 an hour on this side of town, you get offered $18 an hour on the other side of town. You're taking the job, but okay, now you could transfer to a house on the other side of town, and that's fine. So it gives people flexibility. That's a big part of the value proposition to the renters. But for the landlords, it says, okay, hey, so it doesn't work with someone, no big deal. They move out, I get someone in.
Describe what your pitch is to a landlord, when you are trying to, what's the pitch for them to become a pad split home? And then what is it required for them to do? Do you have a minimum standard? Do you, help them?
Great questions. Yeah. So as far as the pitch at its core is, do you want to do good and do well? Right? The do good side is, do you want to solve a really important need in your community and create affordable housing? And the do well is, you're doubling your yield versus traditional single family rentals.
I would say I'm doubling my yield. I'm going to play devil's advocate for a minute, right? As a landlord, I'd say, okay, I'm doubling my yield, but it feels like I'm doubling my hassles, or 10 timesing over my hassles. Is that where you come in and say, no, we're going to manage that for you?
Exactly. So, I mean, it is true that property management is a hassle no matter what, right? That's the nature of it. Now, there's a trade-off there. Managing a property that, say, has 6 bedrooms and 6 people living in it, it has its challenges, and there's trade-offs there. But in general, because we're handling the lease up, that's a major hassle that we take on, and the screening and so on. Because we're taking on the collections, that's a major hassle that we're taking on. So from a property manager's perspective, the hassle looks a lot like normal property management, right? It's proactive and reactive maintenance. And if you're fixing a sink, if there's one person or 6 people, a sink is a sink.
If I'm a landlord on Pad Split, what is the different responsibilities or actions that I have to take as compared to my traditional rental setup with one tenant in there in a house?
Yeah.
Like, what's my extra responsibilities that I could expect in exchange for, I guess, being able to collect a premium on the rents, but have to pay a 12% a quote management fee? I get the do good part, right? But people are selfish, and they're in it to I don't know that you can scale on do good, right? Because people
certainly not. No, the doing well is the most important part. There's no doubt about it.
Right. So what's my extra responsibility?
So it's less around an extra responsibility. It's that the responsibilities are you execute them in a slightly different way. You list a property on our platform. Okay, fine. That's not that different from how you would list a property for rent on Zillow or any other site. It's slightly different. You're doing a room rental, but listing a property is pretty easy. Okay, fine. That's more or less the same, different platform. Handling maintenance is essentially the same, right? You do it on our platform, but hey, there's an issue with plumbing, I send a plumber. Hey, there's an issue with AC, I send an AC tech. That's fine.
My initial feeling would be triple the amount of people in the house equals more maintenance that I'm responsible for dealing with.
So the maintenance is an interesting trade-off. So there probably is a little bit more maintenance. That's true, and it needs to be. You need to underwrite for that. That is accurate. Now, you typically have more kind of routine calls, right? And that's due to a couple things. One is, you're going to have more people in the house. They're not a whole lot more. I mean, hey, you have a 5-person family. I mean, these are typically bigger assets. So, do I have a 5-person family or do I have 6 people in this house? It's more or less the same. But okay, maybe more routine visits. And that's more because no one, in a normal rental, maybe people don't even call you. Maybe they just hey, it's a slow leak, I'll deal with it later, whatever. You end up with deferred maintenance. But in this, you have 6 people in the house. Someone is going to say, I don't care if it's a slow leak. I want someone in here.
That's my role still to that gets communicated to me through your platform, and it's my role to fix it.
Exactly. Or to your property manager. Most are kind of professionally managed. But yes, so any sort of maintenance issue goes to you. That's fine. Now, what is the plus side on the maintenance side is the deferred maintenance. So, I mean, my experience as a landlord is your nightmare is, well, why didn't anyone call me about this? I could have fixed this if you had called me. Or the kind of issues with HVAC around the heat pump is frozen because you cranked it down to 60 degrees in the summer and you froze the heat pump, and now I'm mad because now it's an expensive fix that is going to be a problem. Well, in this model, you control the thermostat because the utilities are kind of bundled in. So, I think you end up with slightly fewer major maintenance issues, the deferred maintenance issues.
What are the startup costs for landlords, do you think, as opposed to?
Yeah. So furnishing is the big one, right? So it's similar if you think about it, the trade-off between doing Airbnb versus traditional rental. Traditional rental, hey, a property's rent ready when someone can move in their stuff. The bar is very low. Airbnb is higher than us because the level of staging and effort is much higher. There's linens. We don't do linens or anything like that. But you're still providing a bed, providing a mattress. So they are furnished units. That's essentially your bar. Now, in some cases, the people may want to add bedroom. Maybe they want to take a living room and hang a door and a case opening. We have other folks who say, hey.
Yeah. Do you find that most people add the extra space, or do they not?
Most are, absolutely.
Most are adding the extra space.
Yep, exactly.
Because that's the whole reason why they're interested in this model, is to maximize the rent by the room thing.
Exactly. They're maximizing yield.
Oh, so what would be the ideal home that would be then converted, and how is it converted to maximize its yield?
So the ideal home is a property that is really not optimal for traditional rentals because it's bigger. Maybe it has a daylight basement. Maybe it's just kind of 1,800 square feet or more, where maybe 4 bedrooms. And one of our early insights was these larger properties weren't great rentals because that extra space wasn't an asset; it was a liability. It meant more expensive turns. It meant if you were doing Section 8 or what have you, more risk that a bunch of people were living there, where, hey, I'm renting to this family, but because there's so much space, I've got cousins and brothers and this and that staying there. So those larger properties for this model, that extra space becomes an asset because your revenue generating units are bedrooms. Oftentimes, look, these aren't your highest end properties. They're maybe transition neighborhoods. It's your kind of around us, sort of your mid 60s split levels that aren't necessarily sexy rentals, but they've got a lot of space and they've got a basement and that kind of thing. So that's kind of the ideal property, one where you look at it and say, hey, maybe it works as a rental, but it's a little too big and it's a little bit too much space, and I love that. But hey, I've got a bunch of bedrooms. Maybe I can create more through finishing out a basement or using a living room or a dining room or an office to turn into a bedroom. And there's other elements to it. We like being close to public transit. We like parking, all those different things at kind of the micro level. But really, it ultimately ends up being kind of, where can you maximize your number of bedrooms within reason for your cost?
Are you finding that the landlords that are signing up for Pad Split, are you working more with investors that purchase properties and Pad Split it, we'll call it, from the start, or they're existing landlords that are looking just for an alternative to maximize the rents on their property?
So it's both. It usually starts as the latter and becomes the former here. So our kind of traditional journey for most landlords is saying, hey, you're already a real estate investor. You're probably already a real estate investor who owns single family rentals. Let's look at your portfolio. Most aren't going to work for this model. Maybe they're too small, what have you, or they're already tenanted, fine. But maybe it works for this one or that one, and your uplift is going to be significant. And they give it a try. Like, wow, I'm making a lot more money. This whatever increase in hassle, if you will, is well worth the increased yield. That's fine. Maybe this one's a little bit better, but the way I really optimize is going out and looking for properties that are really great for this model and going out for that. So it usually starts with the conversion and then goes out and targeting kind of the optimal properties.
So we do certainly have investors in our Pacific Northwest, even in the Seattle area here, that are pursuing this rent by the room model. But definitely, I'd say the difference is the pay by the week. I haven't heard of anybody offering. What's the significance and why did you add the pay by the week? That seems to be where that would be overwhelming for somebody to try and do on their own, because a lot of people are trying this rent by the room model on their own. Is there something attractive or significant about the weekly payment that adds some benefits?
So the reason we do it is, we've had this kind of contrarian view that even though we are landlords, that landlords are kind of lazy and set in their ways, right? I say with love, but it's true, right? Why do we bill rent on the first? Well, because lenders are used to it, and it's easy for accounting and it's easy for collections, right? So I only have one bill to, reconcile. Okay, I only focus on, collections for the first week. It's kind of simple, fine. Yeah. That's why we do it. But it's not very customer friendly, right? So if you're the tenant, it's like, well, when's the first of the month? I don't really know. What if I'm paid, by the week? What about this or that? And if you have a problem, you kind of find out late. And one of the things that's really interesting, if you're familiar with kind of the layaway or like Rent-A-Center kind of furniture business, they're smart. They bill at the end of the month. And the reason they do that is that most people pay their bills sequentially. So if you think about it, and what really kind of lands with landlords is the experience they have is no one likes doing an eviction. They're awful. And when you do it, sometimes, you put someone out and it's like, it's bad. And it's like, how do we get here? It's like, well, I paid my cell phone bill because I don't lose my cell phone. I paid my power bill because I don't lose my power. And I paid my furniture bill because I didn't want to lose my sofa. And then that was on the 29th. And then rent came and I didn't have any money. It's like, well, that's not rational. But
what does somebody, I get all that. Does somebody, what does PadSplit do if somebody doesn't pay are you guys managing the non-payment of rent?
We are. So, we're running that whole process, late fees and so on. And it can, especially when there's moratoriums in place, but it can get to an eviction process where the house eventually is evict. But very rarely, less than 2%. And we're underwriting tenants that are making significantly lower than, area median income. So, and we have a collections rate over 95%. So we've been very successful, and the weekly payments are a big part of that, right? Because the thing is, again, that tenant who pays bills sequentially, which all people do, well, because we bill weekly, we're always on. And because it's bundled, so utilities, furniture, everything in one, tenants have one easy bill to pay. So people fall short. That happens. That's life. That's part of the demographic that we serve. It won't be because I paid my furniture bill or I paid my power bill and now I can't pay the rent.
What are the requirements of the tenant to be able to move into a pad split? Is this serving, you're serving a demographic of a certain level of income earners? Or if I'm a college student, part-time job, can I rent a pad split room?
Exactly. So we don't limit income. If your neighbor, Bill Gates up there wants to move into a pad split, I'm sure he will pass our underwriting process. He'll be allowed to move in. We don't cap it. There's nothing like that. Now, who is actually in the market to rent a room? It's generally people who can't afford to get their own place, right? So it's not like Bill Gates is not going to apply to live in a pad split, and that's fine. We do have some college students. We don't have a lot, honestly, mostly because students want to live with other students and they're relatively high social status. So it isn't hard for them to find other students to live with. They want to meet people and have fun. That's fine. What we end up with, it's workforce housing, right? It's people who, they're your security guard. They're the person who works at the fast food place or in hospitality or manufacturing. They're working, and we do employment verification. We're either tied in with their bank to verify income, or we're checking pay stubs manually. So we're doing all that kind of process on our end. So it's people with jobs, typically. They need to have a source of income, but who aren't necessarily earning enough to get their own place or require flexibility that they couldn't have otherwise through a traditional lease. So we've had truck drivers, that kind of thing, where they say, I'm going to be here for 6 months or whatever. So that's what it ends up looking like. But we don't cap the income or anything else, but they need to have demonstrated income, and they need to they get qualified for a certain price room based off that income.
So what is PadSplit raising VC money for? What are you guys raising money for? What's the plan?
So it's to build out the platform, certainly. And we're, all the time we're kind of adding features and improving that feature set and experimenting with how do we improve accountability within the homes. And it's also to launch markets, right? And obviously the sales and marketing that goes with that. So it's actually been shockingly expensive, everything we've had to spend to get the platform built and everything kind of built out there. We've raised about $35 million so far over the past several years. But yeah, it goes quickly. I've learned, but yeah, building our brand, building out the market launch teams that are going to these markets and selling. I'm actually kind of a sales training and offsite. We're building our plans for 2022, but it's a pretty heavy investment because every rational investor has thought about is asking the same questions, right? That you are. And, it's a relatively high touch process to get people in the door the first time, especially in new markets. So it means a heavy investment in building those relationships and getting people on board. And then once they do, it actually works out quite well for us because the performance is what keeps them coming back and adding new properties and telling their friends and getting that referral flywheel rolling. But up front, heavy engagement to say, Julie, here are your concerns. Here's how we address them. Okay, and we kind of maybe skipped over a bit, but a pretty heavy lift on the implementation side. So it's one thing to say, okay, what does PadSplit do? A big piece of that is kind of that upfront customer service and playbook side where, we've set up hundreds and hundreds of houses and, landlords typically have been operating this model. Their general contractors maybe don't know how you would stage a house or this or that. How do you drive down utility costs? I mean, our team is trained to think through how you would put a 0.5 gallon per minute aerator in every faucet. That's the weird kind of tangential world that we live in. It isn't in the muscle memory of most landlords. So
what are the top three questions? We're going to wrap one, then we'll wrap it up here. What are the top three questions that you get from landlords, or what do you feel is the number one thing you have to overcome with landlords to get them into the ecosystem of PadSplit?
Number one is what you already asked, which is what is the ideal property? And unfortunately, like with all things real estate, and we talked about a bit, but it's kind of this Goldilocks principle of, you want big, but not too big. You want at a good price point, but you don't be in the worst part of the neighborhood. So kind of trying to help them think through that decision-making process. And it's a buy box like anything else, right? You've got a framework for how you buy properties, and we kind of walk through that. Second one is really on the regulatory side. And people ask, how do I do this here legally? It kind of gets down to a very similar conversation, but again, depends on how many bedrooms, depends on where you are, depends on municipality, it depends on your operations. There are places where you could do a house with a ton of bedrooms and operate it really, really well and without any risk or very, very little risk of any sort of code enforcement officer stopping by. There's other places where you can't do anything. I mean, people hate rentals. I mean, HOAs are kind of an extreme example of it, but can you operate an HOA? Really hard to say, but if they don't want you to, you will not, or certain municipalities where it doesn't matter what is actually in the zoning code. Code enforcement will tell you, I don't want you doing this. I'm going to shut you down. So that's definitely a question that requires a really custom approach and a really hands-on approach with investors.
Here's my last question for you.
Sure.
Who is PadSplit partnering with, or who have you partnered with that is helping to propel you forward? Have you guys made some good synergetic connections with, I don't know, municipalities, like you said, or are you still at the ground phase of getting the word out?
We definitely have some solid partnerships kind of across the spectrum. So on the supply side, we have partnerships with, for example, Home Investors. We have a national partnership with them, and we're working through their franchisees, which is great. To kind of institutional funds like Tiber Capital, Starwood, some of the kind of larger funds and some family offices that have been really kind of great on that front. On the municipality side, it's honestly been less fruitful than we would have thought. We've had a lot of great engagement from municipalities, but broadly, they're in a position where every municipality wants affordable housing. That's great. That's a super, but it doesn't actually move the needle for anybody. We need investors who are willing to do it. And very few municipalities have either the will or autonomy, if you might want to think about it that way, to really put something in place that says, here are the left and right lateral limits. This way you can operate, or here's a funding source to make it happen. So we engage municipalities very proactively, But, ultimately they want to preserve their right to say, we don't like this on the back end. So that's, so either way, that's been maybe less productive than we kind of hoped for. But really, ultimately, our best advocates are landlords. I joke because I'm on the supply side. It's my job to sell this thing, but I'm terrible at selling Pad Split. The only people who are good at it are people who've done it and are telling their friends and bragging about it and doing more. That's our growth engine, is landlords who go to their RIA group or their friends or whatever and say, man, I'm making a killing. I'm making a 4% yield on all my normal single family, and I'm making a 10% with Pad Split. You need to try it. That always matters far more than anything I say. Right. That is what it is.
Well, good stuff. Well, we will be excited to watch your growth and see what happens. Like I said, we definitely have people pursuing this model out here more independently. I think some of the value is, if there's going to be a lot of turnover or there's turnover in that model, having, I would find that people would find it valuable to have a place where they can go, where tenants can move around within, like you said, from one pad split to another easily, where they can easily find new tenants if somebody moves out. That seems to be interesting from a landlord's perspective myself. Tapping into that ecosystem seems to be something that would be of interest, right? But great stuff. Well, we'll continue to watch you guys. You're welcome to join us. We have a weekly meetup here. It'd be fun for somebody from Pad Split. We are tight with a hard money lender called Certain Lending. And
they're also a partner of ours. Yeah.
Yeah. So they have been involved with us at Seattle Investors Club for, like 10 years. I mean, we are super tight with those guys, some of our favorite people. And that's what I was saying. We know some of the same people, but you're welcome to join us on a Thursday, 11:30 to 12:30 here Pacific time. And we have a weekly virtual meetup, and we talk about just whatever subjects come up, and we talk about things like this. Be fun to have you jump on with us and get in front of some investors and let them ask you guys a bunch of questions. We'll make sure you get those details here as we wrap up.
I'd love it.
So where should people, if they want to learn more about Pad Split, are you guys going to be at any conferences coming up this year? Are you guys?
We'll be at a fair number. We generally do the IMN conference circuit. So we do kind of SFR East, SFR West. So we're oftentimes at conferences. We can be found pretty easily. I mean, just padsplit.com. If you go there, we're going to track you and chase you, and sales reps are going to call you. I'm easy to find. I'm just Frank at padsplit.com, and people can reach out to me anytime. Awesome. And I'm happy to get you in touch with our much more helpful and useful teammates who actually help out in that process. But yeah, we're easy to find.
All right. Well, good stuff. Well, thanks for your time today, Frank, and sharing a little bit about Pad Split with us. And Joe, where can everybody find the details of today's podcast?
Yeah, if you'd like to get to all the show notes that we've taken today, you can head over to seattleinvestorsclub.com/157. That's seattleinvestorsclub.com/157. Or if you are watching this on YouTube, you can just scroll down below.
Awesome stuff. All right, everybody. Thanks for joining us. Hopefully we're going to see you on an upcoming Thursday. Just go to meetup.com, Seattle Investors Club, grab the link, and we'll see you on a Thursday from 11:30 to 12:30. Join the conversation. Happy New Year, everybody. Bye-bye.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.